Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity. If you look at where forecasts are, look at the blue chip, look where everybody's forecasting some inflation effect from tariffs. So it's very likely that if tariffs are imposed, and let's remember, we really don't know what's happening yet. We're at a stage where we're still very uncertain about what will be tariffed, for how long, at what level. We're going to have to wait to see all of that. But the likelihood is that some of that will find its way. It'll hit the exporters, the importers, the retailers, and to some extent the consumers, and we'll see what that is. You would want to also be sure of a couple of things. One just is that if it turns into a series of things and it's more than that, and if the increases are larger, that would matter. And what really would matter is what's happening with longer-term inflation expectations and how persistent are the inflationary effects. You want to look at all of those things, and you'd want to remember the current context, which is we came off of very high inflation, and we haven't fully returned to 2% on a sustainable basis. So you got to put all that in the mix as you make this decision. The costs of being cautious are very, very low. The economy's fine. It doesn't need us to do anything really, and so we can wait, and we should wait.